Okay, we're live now.
All right. Welcome to our YouTube viewers. Mr. McCubbin, I think you were just on the cap rate portion of your presentation.
That's correct, Mr. Chairman. Thank you. So we'll be using a capitalization rate, Mr. Chairman, of 7.5%. It's at we view this property in the investment category of a Class B at the higher end of the scale because of its age and also because it's a steel building. So turning to my valuation on page 16, my valuation summary, you can see I have the leasable area of 18,044 square feet at $675 a square foot. With an allowance for vacancy of 4%, I arrive at an effective market income, pardon me, of $116,925. From that, as I've suggested, we are taking $3.85 per square foot and expensing the vacant area of the building, the 4% of the 18,044 square foot, so that we arrive at a value expense for that portion, that vacant portion of $2,779. The non-recoverable expenses, as I've suggested, is at 5%. Or $5,846, and other structural 2% at $2,339 for a total expense allowance of $10,964. So we arrive at a net operating income, Mr. Chairman, of $105,962. Applying the capitalization rate, as I've discussed, at 7.5%. We arrive at a total value of $1,412,821, or rounded to $1,413,000. Now, we're going to turn your attention to the appendix. You can see the commercial section there and when the sections were built. This is from the city's website, and the income valuation on page 20. And beginning on page 21, Mr. Chairman, is the INE for the property, and it is fully owner occupied. And that is my presentation, and I'm open to questions. Thank you.
Okay, questions for Mr. McCubbin?
Do not have any questions. Thank you.
Okay, Gail, do you have any questions?
No, I have no questions. Thank you.
Linda?
I don't have any questions. Thank you.
Okay, I got a question on your cap rate derivations there, shown on the top of page 15. It says on the bottom, page 14, net operating income to a calculated using comparative rents. So were these owner-occupied buildings?
No, as far as I know, these were not all owner-occupied buildings.
Were any of them owner-occupied?
Just let me reference our capitalization rate study, Mr. Chairman, please. I do not have that answer, Mr. Chairman.
Okay.
I will have it for next time.
Well, I think this might last for 2 weeks. So
good question.
Okay. All right, thank you for that then. Either party wishes summation on this property?
I'm
No.
good, Mr. Chairman.
I'm good too.
Okay, let's go on to the next property. Let me open the files. Just up the street or to 1525 Dugald. So you can begin, Karen.
Thank you, Mr. Chairman. File number 22-1799, roll number 0605023300. Civic address is 1525 Dugald Road. We are defending the assessed value of $4,024,000 for the 2023 roll year based on the reference date of April 1st, 2021. It contains 2 buildings with 1 story. There's the breakdown of 1987 to 2008 year built. The restaurant overall year built is 2008 and Flex Warehouse is 1987. Leasable area is 28,802 square feet. Land to plan area is 5.98 and wall height is 14 to 20 feet. It wasn't in our evidence, but we received a sales mailer with the agreed upon price of $4,400,000 on March 19, 2021.
4,400,000.
Correct.
March
What was
19th.
Sorry.
I'm sorry, I didn't catch the date.
March 19, 2021.
Thank you.
Sorry, could you
Thank you.
repeat that value for me too, please? Was it
Sorry,
4,400,000 or 4,100,000?
4,400,000.
Thank you.
No problem. On page 3, we provided map view showing its location, also on the east side of the city and right on Dugald Road. Aerial views on page 4 through 6 and exterior views on page 7 and 8.
Could you, do you have that sales mailer in there? So could you share it with the secretary?
Yes, we can send it when we're done the report. Does that seem okay?
Yeah, and then we'll wait for Mr. McCubbin to review it so he can question you on the sales mailer if he so wishes.
I have reviewed this sales mailer, Mr. Chairman, so.
Okay, all right, so then proceed. I would like it to be shared with the panel though, if it's being presented into evidence.
For sure. On page 9 is our income workup for the Flex Warehouse. Shows the premises with the leasable area adding up to 26,400 square feet with a blended rent of $7.49 per square foot. This gives us a potential gross income of $197,616. We've reduced that by a vacancy loss of 3%, plus expenses at 3%, with a shortfall at $3.85 per square foot. This gives us a net operating income of $182,888. We've capitalized that at 6.48%, in which generates our capitalized value of $2,857,625, rounded up to our final value of $2,858,000. On page 10 is our income workup for the restaurant aspect with the one premise of 2,402 square feet with a rent of $30.08 per square foot, giving us a total potential gross income of $72,252. We've reduced that by a vacancy loss of 6% plus expenses of 3%, with a shortfall at $8 per square foot. This gives us a NOI of $64,726. We've capitalized that at 5.55%, in which generates our capitalized value of $1,166,234, rounded down to our final value of $1,166,000. Page 11 are the flex warehouse rent comparables. They are actual net rents from the market, which is what our model is based off of. We've provided many comparables with lease term a range of 2 to 8 years, lease area of 1,562 to 4,160 square feet, average wall height of 16 to 22 feet, effective year built 1977 to 1982, and a range of net rent from $7 to $7.50 per square foot. On page 12 are some comparables for the restaurant. There are 4 comparables with a range of 5 years to 13 years lease term, lease area of 1,564 to 3,526 square feet, average wall height of 11 to 20 feet, effective year built 2014, oh sorry, my apologies, 1995 to 2014, and a range of net rent of $29.50 to $33.65 per square foot. On page 13 is the income value summary. It provides the breakdown of the 2 income streams, and on the left column shows the summary of both of them together. Page 14 has our cap rates for the industrial portion. The city uses a range of 5.55 at the 20th percentile to 7.45 at the 80th percentile. The subject's cap rate of 6.15 falls between this range and is further supported by the outside sources. Page 16 is a site plan. On page 28 is the advertisement for the sale, and the floor plan on page 29. Page 31 to 36 is the expense and income questionnaire provided by the owner.
There's no information because it's.
And this is why there's no information on the income and expense questionnaire, because of the sale. Therefore, based on this evidence, we believe the assessed value of $4,024,000 to be fair and equitable, and ask for it to be confirmed. Thank you.
All right. Questions, Mr. McCubbin?
Thanks, Mr. Chairman. This is Rockney, just turning to your attention to the property sale information. I have it here also. So when was this sale registered?
With land titles, it was registered June 17, 2021.
So after the reference date, is that correct?
Correct, for land titles.
The date of the sale price was agreed upon was March 7th.
That's right. Just to have it confirmed, or clear rather, that it was agreed upon on March 19th.
Okay.
Okay, could you provide that to us so that we can view it?
For sure. Technical difficulties at the moment.
Email it to Ms. Boyley, and she'll put it in our folders. Just so when you're questioning and being questioned on it, we can follow along what's being questioned.
May I go ahead, Mr. Chairman? Or no?
Well, if you're going to be questioning on the sale, we would like to see the mailer.
That was the question I had on it, but I will wait. That was the only question I had, Mr. Chairman.
Oh, okay.
Secretary.
No. Okay, Miss Boyley, let us know when it's in the,
I haven't received it yet, so just waiting.
okay.
Oh, no, I still don't have it. Sorry.
Just do sales mailer. Just type sales.
Okay, sent over.
Right, it's received. I will drop it in. Comment. Okay,
It's in the folder.
yeah.
Got it.
And
Sorry, I don't see it. Sorry. Let's see if I can do this again here.
okay, what's it? Oh, there it is. 1525 Dougal. Okay. I see it.
It's just listed.
Okay, does everyone have it open?
Sorry,
I do not.
It's 15, it's like under orders.
Under orders,
Yeah.
oh, no, I see it, yep. Just here,
Okay.
thank you.
You're welcome.
I have it now, Neil.
Okay, good. So Mr. McCubbin, you can continue then.
Okay, I will ask the same questions again. So when was the sale registered? At Land Titles?
On June 17, 2021.
And also your testimony is that the sale price was agreed upon March the 19th, 2021, and that's why you've included it. Is that
That's
correct?
stated in line two.
Okay. Those are all the questions I have about this there.
I don't- where it was, like,
Okay, continue on with questions on the property then, if you have any more.
Okay. Looking at page 9 of your presentation, so are these model driven numbers?
They are, yes.
They are, for an overall rate of $7.49 a square foot. And again, for the fast food portion, the Tim Hortons, is that a model driven rent, square foot rent?
Yes. Yes.
So, yeah, sorry, thank you.
Yes. I wasn't loud enough.
And those are all the questions I have at the moment, Mr. Chairman.
Okay, Gail, any questions?
Just in regards to the rent comparables for the restaurant portion on page 12 of your presentation, Are any of those restaurants similar restaurant to the one in question with a drive-through? Would these have drive-throughs as well?
Question.
The old mailer or the old, let's see if those are on there. At least some of them do. You have it saved in yours.
Okay,
Looking at it as we speak.
okay.
Okay, open the other one. So you say two are KFC, Taco Bell's, and drive-thrus.
It appears that 2 of them are KFC or Taco Bell drive-throughs.
Okay, thank you. Those are all my questions, Mr. Chair.
Okay. Linda, do you have questions?
I don't have any further questions. Thank you.
Okay. Yeah, I guess I have no questions on that. So you can proceed with your presentation, Mr. McCubbin.
Thanks, Mr. Chairman. All right, if we can turn your attention to page 2 of my brief, please. The property owner is 1525 Google Road Limited or LTD. This property, as you've heard, consists of a warehouse and a Tim Hortons at the front of the property, fronting on Dougal. The warehouse was built in 1987, and the Tim Hortons was built in 2008. Looking at my value, the requested value, Mr. Chairman, on page 2 should now read $3,832,000. And I will go through how I arrived at that value. The highest and best use of this property is its continuance of its current use. Page 6. Turning your attention to page 6, Mr. Chairman, the subject property is comprised of an industrial flex warehouse building located on the north side of Dougal Road. It essentially houses semis and trucks in bays, Mr. Chairman, and I'm told that the owners of those trucks can park their cars there, and there's income picked up from parking on the property also, which I will address in my presentation. In addition to the Flex Bay industrial space, there's also Tim Hortons coffee shop located on the same roll number, and that was constructed in 2008. The property has clear heights of 15.5 feet in the industrial building, and there are 9 separate premises in the property or units. It's zoned M1 and 2 per. On page bottom of page 6 shows a bird's eye view of the property. And on page 7, it shows the the property, it's today. On page 7, the Tim Hortons, and the property at the back, the warehouse at the back with the overhead doors that are grade level. The highest and best use for the subject property is as it exists in its current use. With respect to the income approach to value, Mr. Chairman, I have revised that, and I would like to turn your attention to that revision, which was allowed in. I'm not. Do you have that, Mr. Chairman?
Yes, it's labeled Scan Al Boyley
Okay.
for the panel members.
Yeah, and I just renamed it to the item number as well, just to make it easier if you refresh your screen.
Oh, okay. Well, you downloaded it. Okay.
Thanks. And so if you look at, let's first deal with the restaurant portion of the building. The restaurant portion of the property, sorry, the standalone restaurant. I've revised my value to $28 a square foot, Mr. Chairman. And this is with a vacancy rate of 6% applied, arriving at an effective market income of $63,221. In regards to, and that should not mean management, it should be non-recoverable expense and other, that's 7% of totality, taken away in the shortfall of $8 for that specific type of property. We arrive at a net operating income of $57,642. And we're using a capitalization rate of 7%. And I will address that capitalization rate soon, because I think it's important. With respect to the flex warehouse, we've redone this in totality. And you can see at the bottom of the page, Mr. Chairman, the various units going from 1 to 9 and the actual per square foot rent. You will see the rent that in a gross format to the right of the sheet. Sorry, the second to last column at the right of the sheet on the bottom of the tape on the bottom table. Those are gross, and the uncoverable expenses as reported are $5. So you can see what the contract rent is, and we've used that as market, Mr. Chairman, throughout this income summary. And there is a 12% vacancy rate reported on the property. And so we're actually using a vacancy rate for the flex warehouse of 5% overall, deviating somewhat from our standard vacancy deduction of 4% to 5%. Hopefully this does not remain chronic. So you see our overall rent, Mr. Chairman, is $8.73 a square foot. That gives us a potential net market income of $230,520. With vacancy allowance of 5%, gives us an effective market income of $218,994. Applying the non-recoverable and other expense as well as the shortfall rate to reflect the 5% adjusted for. That would be the deductions in terms of property, that specific part of the property. However, we add in also, we've noted that the property is getting approximately $12,000 in rent for parking. So we've added that below the line. Below the expense line, and you'll see that in the income summary, $12,000, and we're arriving at net operating income for this part of the property of $210,582. And the capitalization rate applied is 7. So we have for this section of the property, Mr. Chairman, a value of $3,008,000, and added to that valuation of the Tim Hortons of $823,000, we arrive at a total value of $3,832,000, and we ask the board to reduce it to that. Now, just to touch on the capitalization rate, what I can tell you about that and why we've used 7%, Mr. Chairman, is that this building, with respect to the restaurant, it's not a typical location for a restaurant. So we've used 7% for the capitalization rate, and the flex warehouse is somewhat older, Mr. Chairman, and that's not the other reason for using the higher cap rate of 7%. In regards to the sale, I'd like to address it since it was brought up. Our preliminary investigations show it to be a motivated sale, and my comments on that is one sale does not make a market. That's with respect to the sale. Again, in regards to the capitalization rate, there seems to be some sort of vacancy concerns with this property, and that's why again it shows a cap rate of 7%. And these are essentially short-term leases, Mr. Chairman, about a 1-year lease in totality generally. So they're not consistent income. You can't look at this place being sort of an investment where you can sit back and relax for a 5-year term. You're always looking at getting tenants or renewing leases within this property. So generally, it wouldn't be a good covenant in the leases compared to typical warehouses. Hence the 7% capitalization rate. And that's my presentation, Mr. Chairman.
Okay, questions, Ms. Diracani?
No, I don't have any questions. Thank you.
Okay, Gail, any questions?
No, I have no questions. Thank you.
Linda, any
I
questions?
have no questions, thank you.
Okay, on the sale, when you say it's a motivated sale, why do you say that?
Well, this and again, this is in the preliminary stages. It's my understanding that the owner was really motivated to get this property, Mr. Chairman, to acquire this property.
Okay.
And
All
may
right.
have paid on the higher side.
All right, thank you for that. No more questions then. We will do 1325 Dugald next, and then we'll have a break. This is when the scheduled break, not an unscheduled break. Okay, 1325 Dugald, and Mr. Rockney, can you begin, and then we'll have Mr. McCubbin deal with class and liability first.
Okay, so I'm going to do this one.
Okay.
And do you want me to just read it in and then do class and liability, or do you want to do?
No, Mr. McCubbin has the onus on class and liability. So once you read it in, then he will proceed on class and liability.
Sure. Okay. The roll number is 070503000500. The address is 1325 Dougal Road, and the assessed value is $3,225,000.
Okay. Now, Mr. McCubbin on class and liability.
Thanks, Mr. Chairman. If you can turn to page 2 of my report, please, you'll see the requested assessment. Quantum is not an issue here, Mr. Chairman. It's specifically class and liability. We feel that a portion of the property should be class code 40S institutional, exempt from school taxes, and that portion amounts to $514,000. So you see the breakdown on page 2 of my presentation. Getting into, you can see the photographs of the subject property, Mr. Chairman. On Dougal Road, and starting at page 8. And I will turn your attention to page 12, please. Spike is located in this building, Special People in Kildonan East. And we feel that it should be exempt from taxation, school taxes, that is pursuant to section 23(1) subsection E of the Municipal Assessment Act. As mentioned, the tenant Special People in Kildonan East occupies a total of 4745 square feet, which equals 15.9% of the total leasable area of 29,748 square feet. We submit that a school tax exemption should be applied to the area occupied by this tenant based on the occupancy of a charitable organization whose purpose is to give relief to the aged, indigent, or sick persons under section 23(1)E of the MAA. And you can see the section below. I don't think I have to read it out, or maybe I should. 23(1) subject to sections 25 and 26. Real property is exempt from taxation for school purposes where the realty property, and this is subsection E, is owned by or is held in trust for use and is used by a charitable organization primarily for the purpose of giving relief of assistance to the aged, indigent, or sick persons to a maximum exemption of 0.81 hectares. The tenant Spike, and that's an acronym, falls squarely within this provision. They are a registered charity, and the registration number is 119159424RR0001, and confirmation of the registration is attached. The programs as described on the charitable registration are as follows. The mission of Spike Inc. is to deliver responsive care, housing, and quality life facilitation in the residential setting to people who require a mix of health and life enrichment services. We are committed to the needs of the whole person. Through the participation of those we serve, we will take pride in making a difference in the quality of their lives. We advocate innovation and excellence in care of the mentally and physically challenged. C, these objectives are also presented in the website of this organizations, and copies are attached for your reference. And it speaks to the vision. I don't think I have to go through that. You will be debating that on your own, I suspect, after my presentation, so I'm not going to read it verbatim. But there are points that are highlighted there. For example, residents and families are valued, involved, and offer choices to enhance quality of life, and so forth. And then it has the mission statement below that, and the contact number, and the location of day service. And then you see the day services on page 14, Mr. Chairman. And the day services, and these are held within the property on the premises itself. The program focuses on the individual's goals and needs through a multidisciplinary approach in areas of physical health, from fun exercises to formal exercises to education, social education, lifestyle, vocation, and recreation. We strive to build community connections. Community means different things to different people. There are as many alternatives as there are interests. We take pride in getting to know the individual and supporting them in a friendly team environment. We also try to work together with the residential team or family to ensure consistency in their lives. and that's from the day services. As I've said, the materials, I'm like to turn your attention to page 15 now, Mr. Chairman. The full materials from the website of this organization are attached in the appendix. We submit that Spike falls squarely within section 21(1)(e) of the MAA as a charitable organization providing assistance to some of the most vulnerable and disadvantaged members of society. And in parentheses, indigent and sick individuals, as referred to in the MAA, and as such would qualify for the school tax exemption. Based on the area occupied, which is 15.9% of the total leasable area, we request that this proportion of the assessment be granted a school tax exemption. And that amount, as I've stated in terms of value, is $514,408 or $514,000 rounded. And you can see the requested assessment breakdown again with respect to the split class code further down in the summary. And the total value remains at $3,225,000. On page 14, it shows you the registration number with the Government of Canada as a non-profit organization and the reporting period and information goes through from the website with respect to Spike. We did provide the income and expense statement, which is not, and the value itself is not in contention at this moment. That's my presentation.
All right. Questions?
Just a few questions. Did you have a chance to inspect the property and observe the activities that were taking place here?
No, I did not, Mr. Chairman.
Okay, that being said, I don't have any more questions.
Okay. All right. Questions, Gail?
On your page 47 of your presentation, I believe it's page 47, it shows the tenant listing of the building, of the property, and it indicates a lease end date of July 31st, 2022. So I'm just wondering if there's a verification of an extension of a lease agreement.
I don't have that information. I know they still occupy the property, Mr. Chairman, and I suspect that there would be, but that information is not included, and I don't have it in front of me.
Okay, and as you indicated, you haven't visited the property, is that correct? Or
that is correct. I have not. Okay. This was prepared in conjunction with Mr. Perry Reimer of Altus, and I'm not sure whether he inspected the property.
Okay.
Yeah.
Okay. Thank you. Those are all my questions, Mr. Chair.
Okay. Linda, do you have questions?
I do note that you have a different total leasable area than the city does. The city says it's 30,146.
Right.
It's not a huge difference, but it does make a difference in the percentage.
Yes, it would make a difference in the percentage. We would, however, it was ascribed from the cities, I believe.
On page 1 of the city's brief, it says 30,000.
Sorry, pardon me.
On page 1 of the city's brief, it says that the size is 30. So you're saying you go with that?
This is the plan.
Yes, bear with me, please. We are using, for our intents and purposes, a total leasable area of 29,748, and that can be found on page 10
Yes,
of my presentation.
it's also found on page 41 of your presentation, actually, because it's got the rent roll.
Right. And that is the gross area, the total leasable area we're using to derive the breakdown.
Okay, thank you. That's all my questions.
Okay, question on your calculation method. You just took a percentage of the gross area. Why not the specific rent on that area, either, as determined by the city, which seems to be $7.99 a square foot, or as shown in the rent roll? Why not just use that as the amount for the school tax exempt?
Right there, I've seen it done in both cases, Mr. Chairman, where it's been done using the actual rent and running an income summary on that specific portion, and also taking a percentage. In my presentation here today, we're using the percentage format, and I have no and I guess we're using a percentage format.
Okay. All right. So no further questions then. You can begin, Mr. Lobenstein.
So I don't have any materials to submit for this. I'll just I'll speak on some of the research I've done into this. So we're not in disagreement. This is definitely a charity. It's just that the question is what's actually taking place in this property. And the thing is that there's 3 separate properties for Spike across the city. So at the moment, we can't really differentiate which property is doing what. So what the city wants to do is we want to go ahead and inspect all 3 of these properties and see if they do fall under the act, to give them exemptions to school tax. We feel the purpose of the act is that they should be giving relief or assistance in this premise. Whether or not the charity does that overall is one thing, but this premise, they should be giving relief or assistance in the premise. So what we want to do is go out and inspect the premises. You have to set up dates to inspect these premises. You have to, you can't just walk into these buildings, they are locked. So that's something that we want to do. And we want to see if all 3 of these premises will fall under the act. So I spoke with the executive director, his name is Peter. He mentioned there were activities taking place in this premise, but what those activities exactly were, he wouldn't say. So I don't know if that necessarily falls under the act of giving relief or assistance. So this is something we need to figure out for all 3 properties, not just one.
Okay. Is that your presentation?
That's all I have, yes.
All right. Questions, Mr. McCubbin?
I have no questions, Mr. Chairman.
All right, Gail, questions?
With regard to a city inspection of the 3 properties, if it's determined that the activities are occurring in all 3 properties, would the effective date be for the go forward year for 2023, or would it be retro to them occupying?
Well, I don't think it'd be retro to them occupying because it goes back so far, as we saw in the lease. They look like they're already in a renewal, so it would not go back to being the lease. But we look to see how far back we could go. Off the top of my head, I couldn't tell you how far back that is at the moment. So,
but it would be effective if applicable. It would be effective for the 2023 year.
For the 2023 year, yes, it would be.
Okay, thank you. All my questions. Thank you.
Okay, Linda.
Just one question out of curiosity. Is there not an application process for this where this information can be submitted to the city earlier on?
Correct, there is an application process, and the application process does give us more time to go and inspect the premises. Unfortunately, when this comes through during appeal season, it's time limited, so we can't always get out to these properties to look at them.
Thank you.
Okay, I'm going to ask again, the Interpretation Act, Section 6 of the Interpretation Act reads, every act and regulation must be interpreted as being remedial, which means it must be able to give remedy, and must be given a fair, large, and liberal interpretation that best ensures the attainment of its objects. How do you think that should be applied to Section 23(1)(e)?
In my personal opinion, I think what we're doing here is we're looking at realty, we're looking at the property itself. So inside this property, they should, it's for the purpose of giving relief and assistance.
Okay, so it has to be actually done on site and not merely facilitating that being done somewhere else in your interpretation?
Correct.
Okay, all right. Mr. McCubbin, do you have any comment on my question on the Interpretation Act?
No, I don't, Mr. Chairman.
All right. I reference that because it was referenced in the relatively recent decision on the school exemption case from the courts.
Right.
Different exemption, but still. Okay, thank you for that. We'll reserve on that and we'll get back to you. And now we'll take a 10-minute break till 2:40.
We're live.
All right, welcome back. We'll go on to the next item remaining on the agenda, which is item 5205 Shepherd. So Mr. Ruckany, you can proceed.
Thank you very much. File number 22-1892. Roll number 14041622000 Shepherd Street. We are defending the assessed value of $3,004,000 for the 2023 roll year based on the reference date of April 1st, 2021. It contains one building with one story. The actual and effective year built are both 1983. Wall height of 10 feet is for the office area. It doesn't state here, but the warehouse is 17 feet. The leasable area is 27,428 square feet. The land to plan area is 3.38. On page 2 are the subject property leases with their net rent of $6.50 or $6.95 per square foot. Page 3 and 4 are a few maps provided to show its location. It's located in the Inkster Industrial Park near Inkster Boulevard. Aerial views on page 4 through 6. Exterior photos on page 6 and 7. It shows the loading bays on page 6. On page 8 is our income workup, showing the 4 premises with a total of 27,428 square feet of leasable area, with a blended rent of $6.34 per square foot. This gives us a total potential gross income of $201,297. We have reduced that by a vacancy loss of 4%, plus expenses at 3%, with a shortfall at $3.85 per square foot. This gives us a NOI of $183,224. We've capitalized that at 6.10%, in which generates our capitalized value of $3,003,672, rounded up to our final value of $3,004,000. Page 9 are 6 rent comparables. They are actual net rents from the market, which is what our model is based off of. These 6 rent comparables have a range of lease term of 2 to 5 years. Lease area range of 4,000 to 10,000 square feet. The average wall height of 18 feet. Effective year built is 1973 to 1980 range, and net rent of $7 to $8.25 per square foot range. On page 11 has our cap rates for the industrial portion. The city uses a range of 5.55 at the 20th percentile to 7.45 at the 80th percentile. The subject's cap rate of 6.10% falls between this range and is further supported by the outside sources. Page 13 to 15 is the property's layout. And page 23 to 30 is the income and expense questionnaire provided by the owner, as well as their income statements. So based on this evidence, we believe the assessed value of $3,004,000 to be fair and equitable, and ask for it to be confirmed. Thank you.
Okay, questions, Mr. McCubbin?
Yes, thank you, Mr. Chairman. So on page 2, Ms. Rockney, you did provide the subject property leases, which span the reference period. in that table, is that correct?
Correct.
Yeah, but on page, and we're dealing with a site-specific valuation of this property. But on page 8, you have used the model rents, is that correct? Model generated rents.
That's correct.
Okay. Those are all the questions I have. Sharon.
Okay, Gail, any questions?
Just in regards to the property leases, oh, no, you know what? I see the answer here, so I'm fine. Thanks. No question.
Okay, Linda, any questions?
I don't have any further questions, no.
Okay, a question I have, and I have heard this property in previous cycles. It's somewhat unique and it's got an office area that's quite a bit lower wall height than the warehouse area. How is that reflected in your comparables, which they seem to have wall heights of 18 feet or so throughout? I take it to be throughout the property. So wouldn't the lower wall height of the office area be a negative in that respect?
No, due to the office space is typically lower wall heights than the warehouse.
The warehouse is at 17.
And the warehouse is at 17 feet.
Yeah, but a lot then of your I don't know what the breakdown is between office and warehouse area in the subject property, but a lot of it would not be very usable space for a warehouse operation then, would it not?
Unfortunately, I don't have the breakdown in front of me of the space difference.
Okay, thank you. So Mr. McCubbin, you can go ahead then.
Thank you, Mr. Chairman. Property owners 2113686 Manitoba Ltd. The age of the property is 1983, and we're asking for a reduction in value to $2,601,000, Mr. Chairman. Seeing that the assessors brief is in evidence, I'll point out they have a good idea, and it's actually better presented in their brief than mine with respect to the office area. It's approximately 30%, Mr. Chairman. We have it in our records. And if you can look at the roof line on page 5 of the assessor's presentation, you can see how far back the office goes into the building. That's approximately where the office ends. And that's approximately, we have at least 30% or almost 1/3 of the building. Office area, low ceiling heights. We feel that the highest and best use is the continuance of its current use, Mr. Chairman. Turning your attention to page 6 of the presentation, of my presentation. Property is located at 205 Shepherd, as you've heard. It's best described as a multi-tenant office / warehouse building. The masonry wall structure was built in 1983 with a total gross floor area of 27,603 square feet. And there are 2 grade level doors with respect to the warehouse area. The reported wall height is only 10 feet, and that would be in the office area. And the average build out is about 30% of office space. The site is essentially rectangular in shape. and is approximately 93,721 square feet and zone M2. And on page 8, you can see photographs of the subject property, Chairman. I can see, looking from the photographs, there are more than 2 grade level doors at the back of the property. There are 1, 2, 3, 4, 5, 6, 7, and 8. So I stand corrected. On page 8, it's fairly obvious there. In regards to the valuation of this property, Mr. Chairman, if I can turn your attention to page 13. The subject property has been valued by the Assessment and Taxation Department with an overall April 1st, 2021 model rent of $7.34 per square foot. The subject has the following leases in place as of April 1st, 2021, and it's essentially the same information that's been included in the assessor's briefs. The 4 units in there, and the lowest rent is $6.50. And the 3 high rents are $6.95 per square foot. We believe that the leases are deemed to be at market, given the unique situation with respect to the finished areas of this property, grade level loading. The overall net rent used by Altus, is $6.87 per square foot, which equates to potential gross income of $186,803. And the table below on page 13, Mr. Chairman, shows number of rents in the general vicinity of the subject property. Well, Murray Park is quite a distance away. But nevertheless, we have, you see their effective ages and the sizes, with the average being 671 and the median at 7. We feel that the actual contract rents are at market for this specific and a site-specific valuation of the subject property. Vacancy and allowance were the same as the city of Winnipeg at 4%. The shortfall is exactly the same as Chairman 385. We will be applying that in our income summary. And with respect to the non-recoverable expenses, we're using 7% in totality. Capitalization rate. We view this property as no less than it's categorized as a Class A in our review, and smack in the middle of our capitalization rate range. So we will be applying, or we did apply, a rate of 6.25% with respect to capitalization rate as an investment category Class A building. Turning to my income summary on page 16, you will see that the rents, the contract rents, we applied that in regards to the potential net income of the property, and we allow for a vacancy allowance of 4% and expenses of $385 for shortfall, 5% for non-recoverable, and 2% for other structural. We arrive at a net operating income of $162,588, and the capitalization rate, we are, I believe, about 15 basis points above the assessment department's at 6.25. We arrived at a value of $2,601,000 rounded, and we asked the board to reduce it to that amount. In the appendix, Mr. Chairman, it shows the income summary of the property and the income and expense statements is provided by the owner. And that's my presentation. I'm open to questions.
All right, questions, Mr. Ruckany?
Thank you. In looking at your page 16, I noticed the rent being similar as the actuals on our page 2. My question is, do you happen to know why the most recent lease, being the first one, with one of the lower lease space in comparison to two others, why it would have a lower rent than the others?
That's a good question. These are all negotiated rents at various periods, Mr. Chairman, and it depends on what they were able to negotiate at the time. We just have factual evidence after the fact. I'm not privy to that information, but I can suggest that maybe finish has something to do with it, but I'm not certain of that. But they're fairly close to the other rents. They're very comparable. Or it is very comparable, so.
I have another question. On your page 13, would you suggest that these are at market, these leases?
The lease comparison, or
Correct.
pardon me?
Correct. We're just
Lease comparison. Yeah, well, this information, Mr. Chairman, was gathered from our database of net rents and comparable, I guess, comparable properties. And these would be at market. They are market rents, Mr. Chairman.
We were just more so looking at your number 9, 10, 11, noticing there are substantially low rents and much older leases. We thought by removing those, it would change the average to $7.32.
Right, that may be so, but I've included those in my valuation. I guess we can have a debate about all the rents in my property. Some of them are, the 23,000 is a fair size compared to the subject property. The other rents are much smaller in nature. Yeah, I guess you can actually take out specific rents and come up with a different average and median. We just feel that this shows that the actual contract rents are at market, and it deals with the site specific valuation of the property itself.
Those are all my questions. Thank you.
All right. Gail, any questions?
No, I have no questions. Thank you.
Linda, any questions?
I have no question, thank you.
Okay, on your comparables there, some of the leases are quite old and long since expired. What do we how much reliance can we place on those leases?
Right, and they may be stepped up in some cases, Mr. Chairman. I guess. Yeah, that's a good observation.
Okay. I have no other questions then. So thank you very much. We'll go to our last property on 26 Mandalay. Drive. All right, let me just open the files. Okay, Mr. Rockany on 26 Mandalay.
Thank you, Mr. Chairman. File number 22-2363, roll number 14064120500. Civic address is 26 Mandalay Drive. We are defending the assessed value of $4,153,000 for the 2023 roll year based on the reference date of April 1st, 2021. This contains 2 buildings with 1 story, an overall year built of 1976, wall height of 17 to 19 feet, leasable area of 52,582 square feet. Land to plan area is 2.48. The subject property leases are listed on page 2. Maps are provided on page 3 and 4. The subject is located in the Inkster Industrial Park, just off of Inkster Boulevard. Aerial views on page 4 and 5. Exterior photos on page 6 and 7. On page 8 is our income workup showing all the premises with the leasable area adding up to 52,582 square feet with a blended rent of $5.93 per square foot, giving us a potential gross income of $311,976. We have reduced that by a vacancy loss of 4% plus expenses at 3% with a shortfall at $3.85 per square foot. This gives us a NOI of $282,414. We've capitalized that at 6.80%, in which generates our capitalized value of $4,153,147, rounded down to our final value of $4,153,000. On page 9, you will find 6 rent comparables. They are actual net rents from the market, which is what our model is based off of. We've, with the 6 comparables, the lease term range is 2 to 5 years. Lease area 3,000 to 7,500 square feet. Range of 14 to 20 feet of the for the wall height. Effective year built is 1969 to 1981, and a range of net rent $5.75 to $6.25 per square foot. On page 11, you'll find our cap rates. For the industrial portion, the city uses a range of 5.55 at the 20th percentile to 7.45 at the 80th percentile. The subject's cap rate of 6.80% falls between this range and is further supported by the outside sources. Page 13 to 17 is the income and expense questionnaire completed and provided by the owner. Based on this evidence, we believe the assessed value of $4,153,000 to be fair and equitable and ask for it to be confirmed. Thank you.
Okay, questions, Howard?
Thanks, Mr. Chairman. Just a couple, which I think I know the answer to already. And I believe it was stated on page 8 of your brief. So the overall rent, I believe you said uses $5.93 per square foot. And that is in essential, that's in effect model driven.
Correct.
Okay. I've got no further questions, Mr. Chairman.
Okay, Gail, questions?
I have no questions. Thanks.
Linda?
I have no questions either.
Okay, proceed, Howard.
Thank you, Mr. Chairman. The property owner is Norwin Industrial Center Ltd. It's a 1-story premise with no basement. The rentable area is 52,641 square feet on a site area of 3 acres. And we're asking that the assessment be reduced from $4,153,000 to $3,657,000. You can see the property below, Mr. Chairman, on page 2 of my brief. Front of the property. The highest and best use is its continuance of its current use. On page 6, we describe the building in some detail. The subject property is located at 26 Mandalay Drive in the city of Winnipeg. It's comprised of 2 one-story industrial / office warehouse buildings constructed in 1976 and 1977. With a total gross floor area of 31,105 square feet and 21,720 square feet, respectively. Each building has 10 units ranging in size from 1,087 square feet to 4,768 square feet. The wall height in the original building is 19 feet, and in the building built in 1977 is 17 feet, slightly lower. These wall heights are inferior by modern industrial development standards. Usually, wall heights would be anywhere from 20 to 24 and upwards for industrial standards today, but this is what was built back in the late 70s. It's a regularly shaped site, Mr. Chairman. You can see from the aerial view, aerial photographs, sorry. It's at the intersection of Mandalay and Wyatt, sorry. And the site is, as I've said, 3 acres. Page 7 shows the amenities surrounding the property. The first that was got in Google Maps shows the location of the property and the amenities surrounding it. And below is another aerial photograph of such a property. And so it is on page 8 also. The highest and best use is its use as it exists today. With respect to the income approach, Mr. Chairman, reported leasable 52,642 is used. The rent, as you've heard, it's been valued by the Assessment and Taxation Department at a rent of $5.93 per square foot overall. We provide the actual rents in the table below, and we deem this to be market and will be used in the valuation of the subject property. We also had to value the vacant space of 2,940 square feet, Mr. Chairman, and we valued that at $6.25 a square foot. All the leases you can see span the reference period quite nicely, with the exception, I don't know why that has been renewed, but Mayor's Packaging continued to exist in the building, so obviously it was stepped up. Our comparisons are below, form of 5 properties with an average of 559 and the median 625. We feel that the actual contract represents market when valuing this property. For the balance of the valuation, we agree with a vacancy rate of 4% and a shortfall rate of $3.85. We continue to apply the allowance, the non-recoverable expense management and other of 7% of totality of the effective market income, Mr. Chairman. And with respect to the capitalization rate, we view this property as a Class B and with in the middle of the range, so that cap rate would be 7%. This falls in our study. On page 16, you can see the income summary and the actual rents that we've used, Mr. Chairman, with the exception of the vacant space, which we've placed $6.25 per square foot on, as there's a projected actual rent that may be obtained. We've allowed a vacancy percentage of 4, as I've said, and shortfall of $3.85 with respect to the vacant space. Non-recoverable of 5% and structural of 2%. So total expense allowance of $27,987 is applied to the effective market income, arriving at a net operating income of $256,015. We've used the capitalization rate of 7%, and we arrive at a total value, Mr. Chairman, of $3,657,000 rounded. In the appendix, it shows the building sections and the income summary provided from the assessment department's website. Or not website, but you have to go into the properties information. The owner's information, sorry. And then the income and expense statement follows that. So, in closing, I'd ask the board to reduce the value from $4,153,000 to $3,657,000. And I'm getting to question.
Okay, any questions?
Yes, just one. On your page 14, you provided some comparables. Regarding the cap rate for 58 Hutchings, would you suggest this being a good comparable?
It's one property in our in our study, Mr. Chairman. It is in fact around the same size as the subject property, or a little larger. I think they're all good comparisons to the subject property. I hope that answers your question. I'm not sure. I think they're all good comparisons, including that.
Thank you. Those are all my questions. Thank you.
Okay, Gail, any questions?
I have no questions, thank you.
Linda, any questions?
I think you mentioned that the 2 leases at $4 that have end dates of 2001, that they likely were specced up.
That's what's being reported still in the income and expense statements.
Still being reported.
Yes.
Because if you took them up to what everyone else is paying correctly, it would bring it much closer to the city's actual.
Right, and that might have to do with the finish itself. If we look at the income and expense statements. Those are the reported rents, and I can only guess that would have to be the finish, and that's the rent they were able to negotiate.
Okay,
Yes.
thank you.
Right, I'm just looking at those rents, and they seem to start after they've ended. Is there an error there somewhere? Says lease start date 1st of February 04 and the end date 1st of January 01.
Yeah, that seems to be an error.
I haven't looked at the actual rent roll to see.
If we look at the rent roll, that's the spaces we're speaking of, there 6,800 and 1,087 square feet. Now, you may be able to blow your
Yeah, I'm looking at the rent roll and
Right.
it
Yes, dates.
mayor's packaging.
right.
It says a lease and 110001. So
Right.
unless unless it were the Romans were occupying that site at that time.
I wouldn't want to speculate on this, but this is what's been reported, Mr. Chairman.
Okay, so it's
And they are in there, and they're reporting to pay that rent. But that's I can see what we can do to rectify that in our database with respect to the lease, start and lease end. We would have.
yeah, so we really don't know what the end date is.
Yeah.
Seems to be just a number thrown in there for some reason.
Yeah, and that can be a number of things, including month-to-month situation, but I don't think they've been in here for quite a while. So,
Yeah.
but they're still reporting that amount, so.
Yeah.
Yeah,
Okay. All right. So thank you very much for that. I guess this is the last property on the docket today, and this hearing is now adjourned. So thank you very much for your capable presentations.
thank you, Mr. Chairman.
Thank you.
Thank you.